Hi, everyone. This is Christine Kopr with Sotheby's Realty in Vancouver, BC, with your June market update. May came to a close, and we're going to review those stats and have a look at what's happening. The narrative has been slower sales, higher inventory. However, we have seen steady upticks in pricing. That's very interesting. Not all segments are performing the same. We also had our first interest rate decrease in the beginning of June. Let's get right into the stats so you can have a look at Metro Vancouver, what it takes to purchase a home in Metro Vancouver, but then we're going to break it down to Vancouver East and Vancouver West so you have an idea of what your benchmark prices are in those neighborhoods, as well as what's happening with the months of inventory and where prices might be going as we move forward. Every month, I like to take a look at this graph, going through all the statistics and putting into a graph to put it into perspective. These are statistics for the greater Vancouver area. So this covers all the way from Maple Ridge to Whistler and everything in between. It's a high level overview of what is the trend going on in the market right now. Then, of course, we need to get micro granular into your neighborhood and your market type. If you're thinking about buying, where those opportunities are, and if you're thinking about selling, what's coming down the pipe. Now, I like to go back just a little bit because it puts these numbers into context. So I'm going back to November, December, where the market was a bit abysmal. And we're going to take a look at some of those numbers. May ended off with 2,733 sales. That's down 20% year over year. Last spring was very hot. Sales were also down 3.5% month over month. And to put it into perspective, the sales were 20% below the 10-year average. So sales are not quite, we're used to seeing them in May. It was a quieter May than usual. In fact, I would say our spring market was very much January, February, March of this year, although we are still seeing very decent activity. Interestingly enough, we had 6,374 homes listed in May. That's a 13% increase year over year. And if we recall, last spring, again, hot market, multiple offers, not a lot of inventory, which was very much buoying this market for the last couple of years since we've gone through this interest rate increase cycle. And to put this new listing inventory into perspective, that's how many homes were listed in the month of May. It was up 13% year over year, but it was also down 10% month over month. We saw our first larger increases in terms of inventory or new listings, particularly in April. That brought on a lot of inventory, and same thing starting in March. Now, May's new listings were 10% below the month prior and 10% above the 10-year average. So we're seeing a little bit more inventory than usual over that 10-year trend. However, when we take a look at our total active listings, we're going to see that it's somewhat in line with where we want to be if you want to have a more normalized market, which I think a lot of people have been seeking, particularly if you're in the buyer category. Now the key is to make sure you take advantage of it when it has arrived, because it's one thing to want to have a market where there's not as much competition and things aren't as wild. When things to start to calm down, there's that little bit of confidence level, but people have to either take the opportunity to act, otherwise they could miss it very quickly. And May ended off with 13,600 homes on the MLS available for purchase. Now that was 46% increase from a year prior. So almost 50% more homes were available this May than last May, if you want to put it into perspective. It was also 8.9% above the month prior. So we've had a steady uptick in inventory, as you can see, kind of starting January, February, we started to see a little bit more inventory, a little bit more inventory. Now, this is not a panic. It's spring market. This is traditionally our busiest time of year. And if we don't have any listings, we don't have any sales. And so we're starting to see more sales above 2,000. You can see, looking back in November, December, very, very quiet months. We're starting to see better activity. It's not blockbuster activity, but it's activity. It is a real market operating here. And we needed that inventory. And we've been seeing this slow and steady creep of inventory. 46% increase year over year, up almost 9% month over month, and up 20% over the 10-year average, because Vancouver tends to have a very low inventory situation most of the time. So it's kind of an interesting play here. So we're 20% above the 10-year average. However, one would argue that a lot of economists say that we need to have between like 14 and 16,000 active listings for our market to be a healthy, balanced market, so to speak. Nothing too hot, nothing too cold, right? Just like Goldilocks and the Three Bears, just right type of thing. Obviously, those markets don't always come. And in fact, if you checked out my previous market update, we actually barely ever been in a buyer's market. So if you're thinking about buying, this is really something to stop and think about, because obviously we can't predict the future. There's always fear, there's things that could always go wrong. But if you're in it for the long term and you're looking to purchase a home, these are the opportunities that come along. And not that we're sitting in a buyer's market specifically overall, but there are certain segments that are starting to see that. And there's also some opportunities that sometimes you think great product, great price is going to move, and it doesn't. And that can be your opportunity. Obviously, for sellers, we have to be prepared. There's going to be a lot more competition as we can see the inventory accumulating. So where are prices going from here? Well, months of inventory is the gauge that I like to focus on. It's simple. It basically predicts where things are going. We have 5 months of inventory at the end of May. So for those of you that don't know, between 4 and 6 months of inventory is considered a balanced market. It's where the amount of available inventory, so call it 13,000 homes, divided by the amount of sales that happened that month, if that was consistent, how fast would we sell through all the existing inventory if no new inventory came on? That's what months of inventory is all about. And that 4 to 6 months is that balanced market. It doesn't favor the buyer or the seller. 4 months and below is considered a seller's market because there's just not enough inventory to satiate the demand. There's strong demand, and we could sell through that inventory very quickly. And in fact, in the last couple of years, we've only had like 2 months of inventory when things were really bananas. 6 months of inventory and above, as that starts to accumulate and stay in that particular pocket, tends to move towards downward pressure on pricing because there's more inventory than there is demand. And eventually you get a rollover and you start to see some downward pressure on pricing. Or if not for like those cream puff properties, it's really felt in the properties that might have characteristics that are undesirable for the marketplace, aka properties that really require renovations or have other characteristics that may not be that perfect move-in ready home. If we go back to November, December of last year, when things like the confidence in the marketplace really wasn't there, you could tell that the market wasn't as active as it was. The market sentiment was just a bit off, particularly because we didn't know when interest rates are going to be decreasing. Everyone had talked about it, but we kept seeing signs of strong inflation. And so this was not a great time in the market. And you can see the reflection over into the benchmark price. Now in the spring, you see that has really tightened up since December, January. Very typical as well. It's just not the time of year where a lot of people are taking action. So there is a little bit of an accumulation of inventory because there's just not a lot of transactions. But then spring comes, the activity comes, and it starts to tighten up. And you can see that here, 4.7, 4.3, 4.4. But now we're starting to see this higher double digit, aka 10, 12, 13, 14,000 homes listed on the MLS. We're still getting really good sales, but we're getting this little bit of a trickle effect. And perhaps eventually that might lead to some downward pressure, which we just saw here on the benchmark price in the last few months previously. And at the end of May, we actually had our first increase in the benchmark price since January. So that's kind of interesting if we're all wondering, where's this going to go? And this is where it's a little bit of a funny time in the marketplace, which can definitely mean opportunity for sellers and for buyers particularly. So our benchmark price in the Greater Vancouver region is $1.212 million. That's up 2% year over year and just up a little bit, half a point month over month. So things are progressing in the right direction. But coming back to understanding and predicting the future, we're going to take a look at some data here that would suggest that in some categories, prices should actually be decreasing, but they're not. And so that's the thing. The good homes are selling and maintaining, not only retaining their values, but increasing their values in some circumstances. So it's not always a crystal ball. And if you take a look here, had you actually jumped in the market back in this point in time where everyone, or maybe the market felt like the sky was falling, we don't know how long interest rates are going to be elevated for, and if we're ever going to actually see a decrease in interest rates, if not another increase in interest rates, this was the opportune time to take advantage of the market. Now we're seeing this first little uptick in prices, and that is even prior to this most recent and very first interest rate decrease from the Bank of Canada. So it is a very, very interesting space right now, and I would love to hear from you. What questions do you have about this? Very quickly, benchmark price for detached home in Metro Vancouver, just over $2 million. It's up 6.3% year over year and up 1.6% month over month. For townhomes, we're looking at 1.127, up 4.3% year over year, up 1.3% month over month. Now, condos, this is the interesting segment. We are seeing a little bit more inventory here. There has been some downward pressure on prices, interestingly. We're sitting at $776,000 for your benchmark price, up 3.2% year over year. But month over month, we've had another 0.1% decline. So tiny, pretty much negligible price change there. And this is for Metro Vancouver. We're going to take a look at Vancouver West and East next. But interesting because there are some opportunities there in that condo space. So if you're a first-time home buyer and interest rates just went down, and this may be the beginning of that rate reducing cycle, now might really be the time to get in touch and let's put a plan together for you, because the opportunities here may not last forever, but it could be the opportune time to take advantage of if you're getting into the market. Where are things going for Metro Vancouver? We can see the sales are down, inventory up for detached. We're sitting at 6 months of inventory, so right on that cusp of balanced buyer's market. And the months of inventory did increase month over month just slightly. We are continuing to see an increase in the benchmark price, so isn't that interesting? Townhomes, sales are down, inventory's up, but we're still sitting at 3.4 months of inventory. That's a seller's market. Although we have had a little bit of an increase, 13% month over month, went from like 3 months of inventory to 3.4, like negligible, but growing. And condos, sales are down, inventory is up, sitting at 4.5 months of inventory. So just got out of that seller's market into more of potentially a balanced market conditions. And month over month, there's a 22% increase from, I think we're sitting at 3 point something months of inventory, but prior, and now we're up at 4.5%, which is a 22% increase month over month. That's a very broad look. So why don't we take a very quick look at Vancouver West? Sales down, inventory up. It's actually quite marginal. This is Vancouver West. Okay, so west side, 6.6 months of inventory. So kind of sitting in that buyer's market. Townhome, sales down, inventory up, sitting at 6 months. And condo sales down, inventory up, and sitting at about 5.4 months of inventory. What are the prices doing? Your detached, your benchmark on the west side is 3.5 million, up 6.2% year over year, and you're up 1% month over month. So, that's a substantial increase, particularly if this continues and if interest rates are starting that rate reducing cycle. Townhomes, 1.492. So almost $1.5 million for a west side townhome. Benchmark is up 5% year over year and flat month over month. And attached condos are sitting at 844,000 on the west side, up 1% year over year, and your benchmark tick down 1% month over month. So here's an opportunity that you might want to take a look at, especially if you're thinking about the west side market. Vancouver East, basically all but townhomes have decreased sales. So obviously that townhome market is actually strong. Increased inventory in all levels or categories. Months of inventory balanced for detached homes on Vancouver East. Townhomes are sitting at 2.5 months of inventory. So that's seller's market. And condos are sitting at just on the cusp of sellers into a balanced market. But here's what's interesting about prices. Your detached market is sitting at 1.879. So almost $1.9 million. It's up almost 3.5% year over year and up almost a whole point month over month. Townhomes are sitting at 1.134, up 2.2%, but took a little bit dip there, 0.8% month over month. Kind of an interesting price change there in terms of Vancouver East townhomes. So if you're thinking of moving up from the condo space, particularly if you're in the market where you can make that jump into the townhouse market, because it might be a little bit soft in the segment that you're looking at, this could be an opportunity for you. And then condos are sitting at 719,000. Benchmark is up 2.6% year over year and up 0.1% month over month. So there you have it. There's a look at what are the prices in Vancouver West and Vancouver East. Now, you want to get granular into your pocket, please reach out to me. We can go through this exercise and give you a really good look at what's happening overall in the market, but then what about the characteristics of the property that you have to sell or the one that you're thinking about buying. And of course, there is the long-term chart going back to 1977. Don't we all wish that we all bought property back here if we were alive? You can see every market, it's never a straight line. There's ups and downs, but it feels like we're trending over into the right direction. Now, the Bank of Canada did have that first interest rate decrease, so 0.25% decrease from the Bank of Canada rate. That will impact your variable mortgage payments or any someone with a line of credit, make sure you watch our video. I teamed up there with Jacqueline Zerby of Total Mortgage from the North Shore, and we talked about how this impacts you and some things to think about. The Bank of Canada, they were at 5%, and they'd like to get 2.25 to 3.25% is kind of the range they'd like to get to, and with a slow and steady decrease over time. There are a few factors there we have to keep an eye out. Obviously, things like US inflation and what the US Fed is doing with their interest rates, because we need to keep our interest rates somewhat aligned so we don't experience inflation from having a weak Canadian dollar in purchasing US goods. However, there is a chance that we might actually see this steady decrease of 0.25% over the next couple of years, which is really their plan, because we're starting to see signs of the economy crack. And actually, here's one for you. Vancity just announced that they're going to be laying off 200 of their workers, which is very unfortunate news. It is kind of what the Bank of Canada is trying to work towards in a way in helping reduce inflation. Hopefully, we've got to that target range that they're looking for. Hopefully, we can hold it there and not have things get much worse. And then examples like this and hearing of different people getting layoffs, etc., are the signs that the economy is starting to crack a little bit. So while I have been a little bit pessimistic and didn't think that we would be decelerating interest rates very quickly, I would love to be wrong, by the way. I heard a very good presentation on this. Between the economy and signs like this showing up and the federal government actually trying to reduce immigration by 1 million people over the next year could actually speed up this process. So to be determined. Always figure out, know your limits, stay within it when you're thinking about mortgage financing, etc. But it really feels like if not now or very quickly, we are going into this rate reducing cycle, which is positive news for all of us. And you can see that here, I followed the 5-year CMB, which is the Canadian mortgage bond, which has influence on fixed term interest rates. And you can see back here, this was back in November, February. It's a 3-month chart. We were sitting at 3.75%. It bottomed there in January at about 3.25, and then it ripped back up. And now we're sitting back at about 3.3%. So if this continues, we're going to see lenders giving out better rates on those 5-year fixed terms, which then obviously influences some of those other 3-year terms, et cetera, what a lot of people are thinking about right now, unless they decide to run the variable, which you might need to do some math there. So if you have a renewal coming up or you're thinking of making a purchase, please get in touch with your mortgage broker or mortgage professional at least 6 months in advance, because you could start securing rates today. Things could bump up. We get another piece of information, US housing data or inflation is up, and all of a sudden the CMB goes up and your fixed rate goes up. You might as well lock it in when it's low. You don't use it, no big deal, but then you can take advantage as the market and time passes. The Bank of Canada is very cognizant of the fact that we have these mortgage renewals that are coming. We're here in 2024, there's even more coming in 2025, and perhaps part of their policies to try to reduce the interest rates closer to the level that people were stress tested at, so they could, while it might be painful, muddle through the next few years until interest rates come down to a level that is more reasonable and manageable. Obviously not emergency rates in the 1 or 2% level, probably more conservative to be budgeting around that 4% range. That's my own personal prediction, maybe 3.5, 4.5, somewhere in there. That would be nice. While more expensive than we're used to, I think it would be a much more reasonable place to be, but you need to kind of put your plan together. I hope you found that helpful. And of course, if you haven't checked out my YouTube channel, make sure you like and subscribe there. If you're seeing this on Instagram, make sure you sign up for my newsletter, go to my YouTube channel, make sure you're getting all the information that we share throughout the month. I'm Kopr with Sotheby's Realty in Vancouver, BC. I appreciate your time and look forward to seeing you next month.